So, oil. We got oil.
It is Wednesday, so we'll get the EIA numbers at 10:30 a.m. Eastern Time. It's about 10:21 right now. We got 9 minutes before those numbers come out. Here's the price of crude oil. We're on the Nadex platform looking at the active contract, September contract. Oil right now trading 66.69. To back this up, I took a peek at the API. Where is it? I believe this is going to be, yep, that is your 430 bar. So we were talking about, that was API last night. We're trading above $67. So we're just below that level, 66.70 we call it. And let's take a look at the type of volatility trades that we can set up here. Maybe looking at a trade on both sides, possibly, right? Looking for exposure for those inventory numbers coming up at 10:30. So what we want to look for is possible bullish spread and a bearish spread. You know, that way we have a multi-leg trade. It's going to give us volatility on either side to claim value. And what's nice is, starting with the 11 a.m.s, oil right now, call it trading 66.70, right? And they have spreads that begin at 66.75. So what's nice here is that we could buy the bullish spread, which is going to be about 5 pennies out of the money. Would be selling the bearish spread, which is about 5 pennies in the money. So what's nice is you have to pay very little intrinsic value. The only difference being is that you're going to pay, there's your $5 difference, which is there's your 5 pennies to the exact, 66.70 on the dot. And so we're just paying for 5 pennies of intrinsic value on the bearish side, but not bad. What are you looking at there? $41 for both sides of that trade, which would represent 41 cents away from 66.75.
It's not bad.
Becomes your break even. Right. That's at 11 a.m. And that's always nice when the pivot points, I like to call them, line up right near where you are, right? So let's see where the noons line up. What's nice is they're going to line up identical. So the only thing that's different here is that we add an hour, right? And what's nice there is that we really get to see exactly what that hour costs, because it's the only variable that changes for the trade. So again, here's your bearish trade. Now we've ticked down about a penny and a half, but instead of, what was it, 23, we're paying 25.
And that will go down 2 pennies.
And then instead of 18, no, it goes up 2.
That's right, because of the hour.
It's for the premium.
So 45.
Yep. 45 versus 41, the first one.
Still not bad.
No.
For an hour, it's not bad at all.
You're paying 2 pennies on either side, right? And you're paying it for the extra hour. So it's like you got to decide whether it's worth $45, which represents 45 cents over an hour and a half, or $41. That's, that's not much for an extra hour, and that's my bias, but it's really not. For that extra hour with the inventory about to come out and with the type of volatility we've been seeing in oil over the last couple weeks. So jump into some of the dailies. They're going to line up a little bit differently. I just want to jump quick. That's the 8 till 2:30s. Maybe we would have $67 we could use. And the full dailies are going to have 67 too. So just give a final kind of like example of what you could do if you wanted. Now this is going to line up differently though. But 67 would be your point here. So you're going to have a little bit of a bearish bias. Let's say, you really think it's probably going to tank, but you just want exposure on both sides. You could be buying the bullish one. Now you're 30 cents out of the money. So you can see this one now only costs us 15 cents. Whereas the others were, what, 21 and 24 or whatever it was. And on the bearish side, though, it's going to be the expensive one, because that you're paying for 35 cents of intrinsic value.
It's not bad. You're paying 49 cents for 35 of intrinsic value.
Yeah, if you're right. $49 total, 35 of which is intrinsic value. So as long as, if oil expires right where it is right now, you're going to get back that 35 cents of intrinsic value. Versus the other trade that we were looking at, if oil expires right where it is right now, you're 5 cents away from your max loss. You only get $5 back. So it is a different trade. This one would take on more of a bearish bias because 67 becomes your max loss, basically, as in the middle of both those spreads. But you could always just purchase one spread or the other. I mean, a bearish spread, that's not a bad trade when you're getting in. Basically, you're selling it at 66.50, so you're basically selling it 14 cents below market, right? Which is kind of what you're paying. You're paying that 14 cents, selling it below market. But what you get in that is that you get exposure down to 62, and you're capped in your losses at 67 with the inventory numbers due in literally 4 minutes.
And I believe it was last Wednesday when we had that big move. First
I've lost track of the moves in oil. You're probably right.
First it had moved higher because it was a big drawdown.
Was that?
And then all of a sudden it blew apart.
And
that's what was actually amazing, looking at that. So that's where they.
I was trying to jump to
I can bring up the Bloomberg.
Yeah, no, that's okay.
That's where the aspect, was and the 230 move.
I know that I've just lost track of the Wednesdays because they've all been so big. That's all that's happened recently. So I'm like, I know that the last 2 or 3 weeks they've all had big moves. Just because oil, man. We were just at $74. We were just at, I think you're right. I think we got the 12 million barrel draw.
Yep.
Last Wednesday, oil spiked to $74,
exactly.
Right? And by the end of the day, it was at $70. Good.
That's Stay right there, folks. Perfect. Tommy and I are going to be coming right back. We have the Dow Industrials right now up 33. NASDAQ is down 21. S&Ps are off 1.5. Gold down 440. Silver off 17 cents. And King Dollar's up 241 ticks. Come right back, folks. Those oil numbers. Welcome back, folks. We're rocking and rolling out here. So crude inventories rose 5.84 million barrels. Gasoline inventories fell 3.17.
For a quick reaction, right, the initial thrust, it spiked down to almost 66.30, 66.32. We're trading about 66.70, and from there we're jumping around a bit. But to bring that over, so headline number, inventories rising. The consensus was they were probably looking for a draw because the refineries are running really fast, right? That was last week's.
Yeah.
You had Bloomberg users expecting the stockpiles to fall 2.6.
Look at that. Ooh.
The median estimate's going to jump up here in a moment as well. That varies somewhat, but that's one indication you got to look at. And you have inventories rising. We had a 12 million plus barrel draw last week. We have almost a 6 million barrel increase this week.
They're pumping it.
Yeah. And with those refineries running at almost like
98%,
it was like 97, 98% last week. They still are building that type of oil. So pretty remarkable. Checking back 66.50. That is some volatility. Whoa, look at that bar.
It's going all over the place. If you happen to be just in your car or on the radio, so we get a move of, what's that about?
Well, we're about 25 cents, 30 cents off the low. I mean, we went from 66.70 down to 66.32, spiked all the way back up to 66.30, 63. Now we're in the middle of that range, and it's been less than 2 minutes since we got those numbers. Right.
And what's going to be pretty cool here, folks, is that inside that volatility trade, we'll see where it shakes out. But what you did do is that you broke the consolidation that this market's been in for the last 2 or 3 hours. Meaning you broke lower.
Sure.
And that's a problem. Technically that's a problem.
Yeah. And on the heels of the API last night, right, which sent oil a little bit lower.
Look at that chart right there.
Now
is that today's chart?
This is today's chart. Yes.
That's nasty.
And to get into, so these are the top lines. So median estimate was even more of a decline than the Bloomberg users were looking for, a decline of 4.1 million.
That's quite a move.
So you're talking about a 10 million barrel miss. You know, you were looking for 4 million to the draw, and you got about 6 to the upside. And Cushing crude down 860,000 barrels, PAD 3 crude plus 3 million barrels. That's probably a big part of the overall top line. Gas inventories, though, gasoline minus 3.1 million versus a decline of estimate of only 700. So some differences going on there compared to the crude.
That's a big difference.
Yeah. Just scanning for nothing too dramatic in terms of surprise, but yeah. And you have gasoline stocks dropping as well as the stockpiles falling more than expected. So one check back into the price. Let's see. Look at that. We're right back up there. Baby. That is a bar, man.
That almost looks like the Netflix bar from yesterday.
And that's where you really want to have, you want to have quick fingers. We talked about last week too when we saw the price. I mean, so here's the possible trades for noon, which we had looked at. Those are going to cost us about $45 or 45 pennies away from it. And we basically got at least that far of a move right away on your bearish trade, which was the 66.75 down to 65.25, and you could have had a bid in there. You could have closed that out and then had this side, your bullish spread, remain active for till noon, which seems like an eternity now when you could have closed out your, and this is all in hindsight, but it's just the various ways you can trade it. Whereas maybe you said, you know what, even with that type of a number, I don't think oil's about to tank, right? There's no way. I don't see it. So you just see the huge thrust down. You get 50 cents in a minute. You say, you know what, I'm just taking that, and I'm going to look for a pop. We'll see what happens. That's quite a 5-minute bar. We're only 4 minutes into this 5-minute bar. Spiked all the way down, and we're now back right basically where we were.
The bulls and bears, folks, are fighting it out.
And I don't imagine we're going to stay there for the rest of the day.
I agree.
We'll see where we end up one way or the other.
Once you get volatility inside an instrument, it takes a bit to calm that thing down. And in this particular case, You know, you get the yin and the yang in there. There's no doubt. Ooh. Look at this. Oh my God! As we're talking, it just popped over the.
Pretty remarkable that we're gonna.
We're at 60. Look at this. Oh my God! Yeah,
quite a
66.80 right now.
Come on, get there to 67.
So we've just moved 70 cents basically in 2 minutes.
Almost there it is. There we go, 67.
Yeah.
Doesn't take long.
That's pretty cool.
It is, it is. We'll check back in. So same thing, not to, I mean, just to, since it's, I mean, I didn't think that type of a situation is in, now guess what? You could take some money off on the bullish side if you wanted to with pop so quick, right? I mean, right now you could take money off the bullish side. You could take $24. You cut your exposure where you only have a $20 trade. Right.
Yeah.
And basically, then you're taking off half your position. You'd be looking for it to plummet back down, but geez, I mean that was a quick move, man.
Yeah, no doubt. Let's go see what these. I'm curious as to what the XLE is doing here. So we take a look at the XLE. Oh, that's let's see. This hasn't moved. The XLE. Well, it was lower and it just did a little pop. So we went from 73.98. We just went up to 35 cents.
Yeah.
ExxonMobil. The thing that's so intriguing here is that they still can't catch a bid. You know, so Exxon's down 52 cents. Chevron's taking a hit. Look at this. So Chevron's going after the 29th of May. That low, 120.06. And it's going to have the volume. Now, this is going to be intriguing because we've done 7.2 million. We've already done 1.2 million. So this is going after basically a high volume swing low, and looks like it's going to have volume. It's definitely going to have volume, man. So this is going to be pretty wild watching this shake out as we move through this day out here.
All right, I got to check back one more time before. Look at that.
Whoa.
I was like, it's just two every 15 seconds, right? So boom, okay.
See,
no more taking value off the top side as we're now back to
that's pretty cool,
almost,
man.
And as you can see, there's still premium priced into these because this has an hour and a half left.
Yep.
It's trading basically almost at the max side of one floor, as in it would be the floor of this spread from 66.75 to 68.25. So there's still, as in, even if you close out this position right now, this position as in you could sell that one and buy that one, and you're able to get $27 still off back in value because they each have value because you have that time, which is nice. Right. There wasn't a, you saw the premium get sucked out because we have the number, but there's still premium priced into that because you still have an hour and a half left. And that's where, if you get spikes in one way or the other, man, pretty cool. All right, we'll check back in throughout the hour.
That is a big number.
It is.
Welcome back, folks. Dow's up 27, Nasdaq's down 23, S&Ps are off 2. Market's kind of staying where it is. Oil
staying where it is too. What happened?
Totally.
So we're only about 10 pennies away from where we were prior to that news. We've had quite a roller coaster within the span of that 25 minutes since the 10:30 number.
Yes.
If you had made a volatility trade with an 11 a.m. expiration, not what you would have wanted in terms of it being right next to that 66.75 expiration price point. If you had made the noons, you're hoping for a little bit of a roller coaster.
You got another 60 minutes, exactly.
Yeah, and we'll see what happens. But I would expect my personal bias for a little bit of volatility because there was a big miss there, and the market's just trying to figure out what it wants to do.
And you've had volatility thus far. It's just that it's flattened out right now.
Right.
No doubt.